Good morning, everybody. Welcome back. Apex Trader Funding time. Again, we are trading with 16, 17, I don't remember, 16, 15, 15, 24, 15, 25 funded accounts, whatever it is. Market skyrocketing before, again, during the night shift. We are definitely skyrocketing again. Everything is moving higher. Everything is beautiful. Tomato, I think today will be terrible PA, so being very careful here. Price action, my friend, you're doing great. You passed your funded your evaluation. You get your funded accounts. Let's freaking go, my friend. Keep doing the momentum. And if one day you're gonna get your losing days, accept it. Good morning, Fayat. Good morning, Nick. Right now, I'm very, very chilling, looking at what the heck is the price action today, and we figured it out. First, opening print level, right? First is that things we put always is the opening print level here. Then what we're gonna do here is take the 1 hour chart. Good morning, guy man. Let's see. Oh, guys, we are so bullish. We are so bullish. We took all these lows. We come back higher. We are holding for the moment. Holding. I would love to see these things coming back and taking the London lows here. I would love to see that. I would love to see these taking the London lows before going higher. Can I add a text? I would love to add a text. Can I add a text to this bar? I would love to learn that. Custom name. Can I change it? No. Custom text. Yes. London low. Let's see. Yes, London. Oh, that's beautiful. London low. That's beautiful. Is it the London low? Yes, correctly. London low. That's beautiful. Oh, I like that. And if I do like this, and then I do this, then I should opening, print. Oh, that's beautiful. Oh, oh my God, this is so sexy. Barcode right now. Yeah, we just wait for these things here to come back a little bit lower, right? Let's see the stocks. Where are we right now? Here. Stocks here. Look at this Tesla. Tesla just selling off. Some sell off there a little bit at the beginning. So we're gonna wait for Nvidia. Just is the only one that give a green candle on the first minutes here on the day. Still early anyway. We're gonna wait for this Nasdaq to come back lower. On NQ, we are definitely getting still back to momentum. So these things has to come back higher. Oh, that's coming back already low, guys. Habibi, Siddharth, Fayat. Everyone moves. We're doing PM. Really missed the short at 5:45. The false breakout. Let me go first. 15 minutes chart, and I will see that. Definitely. Oh, this. I would love to see this breaking this low first before going higher. I will. I wish. I wish that. I wish. 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 We need to take some lows before. Yesterday was brutal manipulation. I spent the whole night catching knives to close at break even, but I lost 15%. I hate crypto, man. Wait, I'm still in the other chart. Man, crypto. I'm thinking just to buy some these days for really long term, really long term. The reason of why I would love to buy crypto, especially on. Let's see if I can get a chart here. Gold contract. I can remove them for a moment. And BTC. I don't know what is the symbol. MBT1. Yeah. So what I liked about Bitcoin is this. Is that we came back and we took these lows here. All these lows, we take them out. So all the people that were trying to long in this part, trying to catch the break and continue higher, they got stopped out. So there is maybe some good opportunity there. Who knows? Do you even know how to read the DOM? Honestly, I don't even read the DOM. It's someone of you is reading it and wants it. It's there. I'm paying it for it. It's something plus for you guys. If you want to use it, it's there. I don't use it. Buy nothing other than Bitcoin. No, man, I'm a gambler. I'm a gambler. I will buy some shitty coin somewhere hidden, somewhere in the coin market cap website, somewhere in the hidden realm. Please take the DOM off. You can vote, guys. You can vote. Who doesn't want the DOM? Or I can put it like temporary. I can even put it temporary. Sometimes I can put it, sometimes I can remove it. I want so badly to come with a funded trading. Hello, I'm coming yesterday from Rome and the market goes back to work. Ah, that's it. But you live in Italy, no, Alfonso? Or you live in Italy? You live in Italy. Oh my God, you live in Italy or you live in Italy? Very annoying. Okay, guys, let me just put it like that. Ah, you live in Portugal. I thought you were living in. I thought you were living in Italy. What is the learning curve? So my point I always say is that if you make money with something, keep going with what you're making money. Changing from crypto to futures is a big change, but it might be a great change for you, right? But yeah, it depends on how you trade, your strategy wise and everything. So learning curve, it depends by many factor. I can tell you tomorrow you're good at it if you're a freaking genius for accepting stuff, but I cannot say that. I cannot promise that, my friend. I wish. No, we missed the long term, but yeah, I mean we can. I like crypto for like some degenerate long term. It's like really putting some money on it that I'm ready that if they go to zero, I'm okay for it. If let's say for example I have $10,000 in my bank account and I decide to put $500, I'm okay to lose the $500. Like it's a 5% risk of my net worth. It's there. If it goes well, maybe it makes me 10K. If it goes bad, it's okay. Running R1 duck race, not today, my friend. I'm sorry. Thanks for removing it on. You're welcome, my friend. You're welcome. If people are getting distracted by it and it's not that good, I just remove it. I have the heat map in Quantower and I tried it. It's not like the DOM, but it's with the heat map. That probably is more interesting, but it's with Quantower. The freaking application is with Quantower. With the premium one, not with the free one. And the premium Quantower is expensive as hell. They honestly Quantower should, because they have like expensive price, like $70 a month. I mean, if you're a trader, $70 a month is not much, right? If you make money, but oh, calm down, $70 a month. Yeah, I mean Mohammed, to be honest, it's not only with crypto. This year is insane. No, I think there is. When they say trade with don't say you're profitable until you have passed a few years of profitability, because reality is true, because market change, the world change, and you have different type of market, and it's insane sometimes. It's really insane. Valknot, do I think it's here is harder for traders? Yeah, 100%. I believe 100% is harder. Imagine during COVID. During COVID, how many traders or people think they were good traders and they were just buying? Oh, I buy here. Everyone was skyrocketing. Oh, I buy here. And everyone was like, I'm a good trader. I make money. Now it's harder. It's much harder. You have a lot of noise. It's a freaking a lot of noise, guys. Wow. So market is pushing, still pushing. We're not getting these levels liquidity for the moment. That's unlucky from us. Unfortunately, nothing is getting liquidity first, so we're gonna wait. It's no problem. We have time. There is no rush. We have a kind of channel there. Where is the freaking channel? Here? No? Drawing tools, geometry, trend, price channel. Lots of fake outs. Yeah. Yeah. Yeah, from my point, like I said, is if you are able to survive this period of, like, let's say for example, last year you were making money, like I was making money, and this year you end up surviving on a way that you close the year break even, right? What happens is that you learned a lot, you learn your risk management, you improved a lot in a lot of skills, you end up not losing money. It's a great win. If next year becomes a little bit easier, you're not out of the game, right? Imagine all the other people that instead are giving up today because they're like, oh, this market is bullshit, stuff like stuff. No, they did not evolve, they did not accept the risk management around it, and then they give up. And next year when the market is slightly easier to read and you're like making the money, you're like, wow, thanks God last year I was disciplined. Oh, Valknut. Oh, this is your first year. Oh my God. If you're good, if you survive this year without losing that much money, you're good. Papa Powell speaks today. I did not see that. Let me see the news. That's a good point, Matthias. Thank you. Papa. Oh my God, what the fuck is that? Papa Powell. What is today? Tuesday. Powell testifies the House Finance Service Committee at 10 a.m. and consumer confidence at 10 a.m. Papa Powell. We're definitely pushing right now, but no entry yet for me. I'm waiting for this 50 minutes range to close. That will be interesting. Will be nice to see this 50 minutes candle closing, how it is. I wish this week would have come a little bit lower, grabbing something, and would have made sense for me to, probably then after grabbing a long. But yeah, there is no reason right now. I'm waiting for this market to give me a little bit. But if we go to the 1 hour chart, you can see that this is really a big area here. This 22,300 have been like a peak of the last days. How many days? From the 11, from 13 days. So 13 days have passed since that day where we made this peak. So it's been like almost 2 weeks. Yeah, Papa Powell is speaking, guys. I will try to put it in the live stream so everyone can listen to him. And it's gonna be here during the live. Wait, is the Apex 80% is still going, or this is the last day? Because if not, I have to change the banner. I don't wanna. Oh no, today is the last day. Okay, today is the last day for 80% off in Apex, guys. So you can use my code as many times as you want. In the meantime that we wait for this, I just remind you that. Yeah, guys, right now we just wait. No rush to cut the rates. No rush to cut the rates. Yeah, it seems. Yeah, it's not a rush. Powell is not rushing on that. Trump is rushing him to cut the rates. Powell is not definitely cutting them. I mean, the last Powell speech FOMC was, where was it? Was somewhere here. Yeah, this one. Look at this. This was Powell and FOMC. This was the choppiness we got during the Powell speech. So, but that was with FOMC. Today, who knows? It's still Powell, so it's still a speech that everyone will listen. Algorithms will listen. Hola capo, hello everyone. Market is going. Oh, 15 minutes candle is closed. We're breaking the 15 minutes range there. Let's see. Let's put it. Let's put the 15 minutes range. We're breaking it right now. That's first step of the day, right? This is the high. Yeah, this is the 15 minutes range. Trade with capo. Hello guys. Trading today together. Let's hopefully make some money. That's the ideal things. Would be nice to see some price action that will make sense. It's funny that statistically, guys, they say that 50% of the time there is a break higher of the 50 minutes or a break lower, doesn't matter, one break and then a break after of the other 15 minute sides. That is 15. Oh, freaking hell. What did I do here? What did I do here? I just moved it. Yeah. It's so laggy. Let me see Tradovate. I'm opening my Tradovate here. Let's see what you're saying about. Be careful then, Mufti. If you see it's laggy, don't do anything. Yeah, don't do anything, my friend. Don't risk it. Better skip a day. I'm checking the one here. Let's see.
Orders filled.
I'm putting around.
Orders filled.
Yeah, no problems in my side in Tradovate. Seems working correctly. I'm getting the same price action price of Rithmic there. So yeah, for the moment it seems working correctly in my side. I put some orders. I'm getting filled correctly. For the moment, it seems okay for my side. I'm not saying that it has to be in your side too, but I'm saying my side. But yeah, just be careful, Mufti, that if you see it slow, don't take trades until you find yourself comfortable. We are not gamblers. We are not. I mean, somehow we are, but we are not gamblers when the system is not in our side. Okay. Rejecting that 15 minutes range. Oh, beautiful. Let's see. Is it? Oh my God! I'm gonna say it. Very good chance we're coming back to these lows. I'm gonna say that. or to grab at least these 50 minutes lows of the day. Oh, I wish that. Ooh. Do it. I'm sorry. Have you ever tried 25k account? How it is, because mid person is to us. Look, it's been a while time. I have not used a 25k account, but Luca Shelby, the guy here with his name Shelby, he trades only with 25k account. He gets payout, and I think it's super smart because it's true that you have $1,500 of drawdown, but you have also $1,500 of take profit to reach to get payout. Not 2,600, not 5,000. Many times we lose ourselves on the idea more drawdown, but in the end, if you have good risk management, 1,500 is the only things you have to reach to get payout. Yeah, from the next time you're gonna probably see me in this account get some 25k sometimes. Yeah. They are great. So someone tagged me. How the heck that the guy tagged me? Okay, my PC right now is totally slow. Okay, oh my god. Oh my god, did you really put this? But wait, you didn't get filled by a tick, Luca, or you just did not? You put it before this tick, or you put it after? Because it's insane. Luca has a short at here at 33.25. No, I think then yo man, that would have been a perfect fill short. Oh no, your fill. No, sorry, that is your stop loss. Your fill's short here. I like this short, by the way. I really like this short. I really like your short idea. I believe we have to grab these lows first. We have to grab these lows. But who knows? Oh, Apple, guys. Look at this Apple. Oh my god, look at this Apple, guys. Look at this Apple. Just selling off. It did not have a 5 minutes green candle, Apple. Look at this. We had a gap up because of the news, but we made only red candles here over and over. I mean, we have quite a few red here on the right as well. Tesla and Microsoft. Amazon is the only one that is continuing pushing after the gap up. Nvidia as well. That's good luck with your short, my friend. That looks interesting. Interesting, definitely. Let's see how it goes. Yeah, 25k account, guys. If you think to buy some 25k account, it makes sense. It does make sense. I'm gonna just show this one again for some people that are interested, then I will remove it. Let's see how it goes. Is there a symbol for MNQ and NQ that clean on TradingView, like not Globex? What do you mean, like that's clean on TradingView, like not the Globex? What do you mean by that? What do you mean by not the one in Globex? News in 7 minutes. Yes. News and Papa Powell speaking as well. So both. We have both news and Papa Powell. Down $170 so far. It's okay. It's okay. Follow your rules, follow your execution. No panic. Typical. It's normal. It's normal having red days, and $175 is not bad at all. How many days? I mean, last week I had a Tuesday with minus $400 when I got the slippage. Like when I trade the mass, I watch SPY chart because it's only from open until the close. So within Qs there are but it's similar. You can do it by yourself. You can do it by yourself. I show you how. I'm in a teaching class right now. I'm teaching you guys. I'm teaching you. Simply do that. Let me go to here. Let me find the I cannot, okay, I cannot select the freaking things. I'm trying to get you, wait, I'm trying to get you the freaking, why the heck it does not work? Oh yeah, now you see it. So for example, this is NQ15, this is the continuous contract. If I go to the 5 minutes, you will, I have a reading indicator that is called, I think something like time zone or something like that. Here on the bottom side, you have electronic trading hours. You click on it and you select regular trading hours. Click regular trading hours, you're gonna see that only New York session is gonna be shown and no other things. Then if you want to back as well pre-market and after market, you show it and you click on it. And that's the lesson is done. News is out, not yet, but we are getting spikes there. Typical Tuesday, for real guys. Surviving is the way to call this period. How you? Thanks, teacher. Wow, thanks. You're welcome. Is there is the RTH in the right lower corner? You have to. What do you mean? It doesn't. It doesn't work. It does not work. Select 80. How do you session select in trading view? Can you please do once more? Okay, yes. Do once more. I can do once more. Teaching class. Oh, that's not me. That's me. Where is it? Where is it? Where is it? Here on the bottom, when you select the NQ1 continuous contract, you go here on the bottom side, there is ATH, that is electronic trading hours. You click on it and you select regular trading hours, and it's gonna only show you New York session time. And after that, or you can put it back, electronic trading hours is gonna show you everything. Lesson done. Welcome back. We're coming back down. Beautiful, guys. Luca, come on. Hopefully your short is gonna work. And news is coming in 44 seconds. Good morning, Sabria. Good morning. Oh my guys, this price action is ugly. You can look at these candles, guys. The candle is jumping 3-4 3-4 points like nothing. What is the freak? My God. What is the spread right now? What is that? What I can see the spread here? I'm trying to find the spread. Spread is 40 is 1 point. We have 1 point of spread. 4 ticks. News is coming in 8, 7, 6, 5, 4, 3, 2, 1. Good luck. Look at these candles, bullshit candles there. Let me change this color of these things. Nothing. Nothing. This candle moved much more than this candle of the 10 a.m. news. Good luck, everyone. Apple still selling off. This market sucks. Yeah, then don't push it, my friend. Don't push it. Don't push the buttons. Don't push anything. Don't risk it. Don't do anything. See you tomorrow. Down $30. $30 is good. Don't push anything, my friend. Better be safe than sorry. But don't throw away months of work and discipline just because we're getting triggered by this. We are stronger than that. Yeah, for the moment, nothing much. Luca is fighting for this sell-off situation. Market is Tesla is still continuing on lower. Google wants to break lower. Nvidia is not doing anything there. And Amazon is coming back. If I have to bet on something, I'm gonna bet that first wants to come here lower. If he wants to do it. If he wants to do it, I would be happy then to look for longs. Above this, I would be happy to look for long. Let's see if Mufti. I want to say let's see if Mufti is speaking. No, let's see if Powell is speaking. If Mufti, our Powell, we would be very happy. Just tell us what you're gonna say. Tell us what you want to say, so we know in advance, and we can make bank together. Let's see. Powell live speaking. Mufti should pick. Oh man, I wish. Okay, it's here. Let me see if I can share it with you guys. 1 second. I'm just gonna be sure that everything is working. Is he live? Yes. I'm gonna put it somewhere in the corner of my screen. He's ready to speak. And I'm gonna put it as well here. And put the audio as well. Not yet, he's not yet speaking, but he's there already. So let's remove the audio until he's back there. By the way, the guy that he has the camera live, what the heck are you doing there? What the heck? What is this? What the heck are you doing? Can you make the person in front of you move?
Is authorized to square a recess at any time. This hearing is entitled the Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. Good morning. I want to thank Chair Powell for joining us today. We appreciate your time and look forward to hearing more about the Federal Reserve's outlook on economic and monetary policy. There's been a lot.
Let's see what he's going to say.
Particularly from our friends across the aisle, suggesting that Republicans in the Congress are steering our economy toward a recession. However, the facts tell a different story. 4 months into the Trump administration, American workers and taxpayers are already benefiting from a strong, resilient economy. The Fed noted that growth is solid, and even former Fed officials have dismissed the idea of a recession this year or is near. Compare that to the previous administration. Under President Biden, Americans endured the highest inflation rates in decades, driven by reckless spending and misguided policy decisions. Now, under the Trump administration, inflation has declined to levels lower than those seen before President Biden's flawed so-called American Rescue Plan, and real wages are finally meaningfully growing again. There's always some economic uncertainty when the United States engages in difficult negotiations necessary to secure more open markets for American goods and services. But that uncertainty is not without a strategy of balanced, lower regulatory costs, pro-growth tax policy, and controls on federal spending, all combined with trade successes, offer economic opportunity. One Fed official, Governor Waller, has outlined how a balanced approach combining potential tax rates with targeted tariffs.
Yeah, for the moment it seems this guy is speaking saying that, oh, Trump is doing amazing.
Clear on that point. We can fight to open markets, break down non-tariff barriers while achieving solid economic growth at the same time. That's President Trump's goal, just as it was for President Reagan in the 1980s. I also want to commend you, Mr. Chairman, the Federal Reserve, for taking positive steps to keep politics out of the Fed, including disbanding 4 internal climate-related committees and making the Fed leaner and more efficient by right-sizing your workforce across the system. These moves reflect a commitment to efficiency at the Federal Reserve. I'm also pleased that Governor Mickey Bowman has been confirmed as Vice Chair for Supervision at the board. Governor Bowman has been a tireless advocate for community banks.
I'm waiting for Powell to speak.
Is eager to work with her on
What is
policies
this?
that enhance our bank's ability to provide
Give us
greater
Powell.
access to capital and services for our families and businesses across our nation. I look forward to today's hearing, and I yield back the balance of my time. I'll now recognize Mr. Foster on behalf of the ranking member for 4 minutes for an opening statement.
Thank you, and I will save everyone a little bit of time. Ranking Member Waters was unavoidably detained. I'll just say a little bit that the markets have kind of spoken on their confidence in the Trump economy. Probably the single.
So the market is not moving, by the way, until
the US dollar is down roughly 10%. Okay, this is not a small thing, and it has caused countries around the world
very choppy right now. I think we're gonna have a
the US dollar
choppiness
forward.
until this week is over.
Worst market responses, I think, to the chaos that we're seeing, the tariffs that are very destructive to international trade, and just everything that the markets are seeing and trying to suffer through. I know I'm contacted all the time by businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of things we should be talking about, and I'm happy to save some people some time, and let's get to it. Yield back.
Gentleman yields back. I recognize the Chairman of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Lucas, for 1 minute for an opening.
The first word of Powell will be,
allow us to evaluate
good morning.
the economy and review the FOMC's policy decisions. It's appropriate to regularly take a step back and assess the central bank's performance and its responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward
Market
to
is just
building
choppy,
on these
guys.
conversations here. One issue that I think warrants special attention is the binding
We're
nature
behind
of the
probably. He
SLR
started speaking.
and
Look at this
SLR
candle, guys.
Treasury market
Luca,
mediation.
you're short.
I'm glad to see the Fed is looking into this tomorrow.
Oh my
I
God.
hope we'll see
Look at this
meaningful
candle,
action
guys.
soon. Chairman
Or
Powell,
probably
thank
he's
you for
already
being
speaking,
here.
or
It's critically
my
important
live
that
stream is
Congress
already
and the
late.
Central Bank have an open dialogue, transparency, accountability. Honest communications are pillars of our system's success. I look forward to your testimony.
That was horrible,
on the
guys.
state of the economy and
Getting your
Fed's plans for the
stop
future.
loss
I
here,
yield back,
getting
Mr. Chairman.
slippage.
Gentleman yields back. I recognize the ranking member
No,
of the
still not
Task Force on
speaking yet.
Monetary Policy,
Okay, I thought
Treasury Market
a little bit of
Resilience,
delay,
and
but
Economic
nothing.
Prosperity. Mr. Vargas for 1 minute for an opening statement.
Thank you very much, Mr. Chairman and Ranking Member, and thank you, Chairman Powell, both for your years of public service and
My
for
love is
being
just
here
behind
today.
the hours.
Since 1977, the Fed has been tasked by Congress with its dual mandate goals of achieving both maximum employment and stable prices.
Miss TP,
Unfortunately, this
you have a few
administration
ticks.
has made accomplishing these goals more difficult. In the Fed's most recent
I mean, I want to have my
economic
TP
projections,
here, the lows
we
as
see a
well, at
forecast for
261,
slower
to be
growth,
honest.
stickier
It makes
inflation,
sense.
and rising unemployment, all of which point to a potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freeze
yes, took
impacting
out
the
the loss.
collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name-calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentlemen, yields back. Today, we do welcome the testimony of the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System.
Yeah, I see that.
Chairman Powell, we thank you for
yes,
taking
totally
time to
much
be with us.
weaker.
You'll be recognized for 5 minutes to give an oral presentation of your written testimony, and without objection, your written testimony will be made part of the record. You're now recognized for 5 minutes.
Ready?
Mike.
Thank you, Chairman Hill, Ranking Member, and other members of the committee. It's great to be back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position.
Why do you watch ES while trading in Q? I mean, they're very correlated to each other. They have mixed companies between each other as well. Big companies are mixed between the S&P 500 and NASDAQ, so there is strong correlation.
To the risks on both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment in recent months and elevated uncertainty about the economic outlook, largely policy concerns.
Also, OSEC is short, and your take profit as well is here. Yeah, every one of you guys has to take profit here at 59.60.
Payroll job gains averaged a moderate 224
Each one of you guys
in the first 5 months of the year. The unemployment rate at 4.2% in May.
And you're short with 6 minutes. What the heck?
Stayed in a narrow range for the past year.
Good luck.
Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total personal consumption expenditures, or PCE prices, rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace
for the moment slow.
To facilitate a smooth transition.
Market not still moving anyway. Stocks are stacked very weak, by the way.
Stance of monetary policy based on the income
Apple still on the lower side. Nvidia sold off quite strongly. Tesla
continue
sell.
to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-run longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Okay.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chairman. We'll now turn to member questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following. After the initial release of the GDP report, the president is driving the economy into a recession. Chairman Powell, the latest FOMC statement described economic activity had to continue to expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace? Or those
Now is the problem is the next questions.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So in looking at your remarks about tariffs today and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 0.1 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective
Some stocks are pushing.
remain close to 10%, or I assume he means
A little bit of
10% or
Nvidia,
lower.
Amazon finding some green
Labor
there.
market remains solid. Prices continue to
And these two are
deflate.
kind of
given that
helping
data
so as well
outlined, I'm
Microsoft
sure data that you're
and
very
Google right now
familiar
pushing.
with. For the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies?
We're still inside the
that
15 minutes
discussed
range, by the way. Yeah?
in a
All
world
this
with,
area
lower
that I
tariffs?
signed is still 15 minutes. So be
Personally,
careful
I
on that.
wouldn't comment on any other FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And you said it was an issue, but that you would stay in your lane and not comment on it.
It is,
But here in this year,
we're still inside the range.
on this idea of tariffs being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job, and we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. we're not commenting on tariffs. What our job is inflation.
Good morning, Falat.
inflation under
Falat,
control,
you still
and
have to
also
text
keeping
me
maximum
Discord to send you the money.
And when policies have
You won
what
last
appear
week.
to be short and medium term implications, meaning
morning,
implications
Oroshenko.
for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. You know my views on price stability. I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate
Good night, Siddharth.
the sole mandate, and we've talked about that before. But I was very curious about your thoughts on former president of the Cleveland Bank
Oroshenko, text me for
quote
Falat.
that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than, all these other factors that enter the employment picture like legislation.
That's so boring, guys.
What's your thought about her quote?
So
I
freaking
personally
boring.
think that's a very reasonable way to think about it.
Thank you very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell, and thank you for being here.
7 p.m. is so weird, by the
Last
way.
week, the FOMC decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. While I was not surprised by the decision to hold rates steady, I was surprised by the committee's revised forecast since March, which represented a decrease of 0.3 percentage points for GDP, a similar increase for core PCE, and an uptick in the unemployment rate to 4.5%. Can you explain?
This is not a committee forecast. These are just individuals submitting their own personal
See you tomorrow, Tomato.
and
First, good job of
bless
accepting your
those as a
loss.
committee.
This is great.
But I think people are
This is
looking
great.
at the incoming data. And
This is the way to
having
do
a
it, my
range of
friend.
different judgments.
So
If you
today
look at
transaction
the
is shit.
range, if you look at
Good
the,
to walk
there's some
away.
tendency you'll see
Are you in a
coverage
trade? Not,
going
I'm not in a
up.
trade,
Those
fellas.
are the medians that you're
Didn't take
talking about.
anything.
I think so.
I hope.
Inflation is projected to have
Yeah, my
moved
Rithmic
up
has 0, no?
because of what we've seen, particularly from tariffs. And I think if you look at other outside forecasters, you'll see very much the same thing.
And
the
what
same is also
data are
true.
you looking for?
Well, we look at the incoming data on, we look at our own forecast and we ask ourselves what's likely to happen. Monetary policy has to be forward-looking. A forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stand of monetary policy as
Spice is so
appropriate.
weird. It's so
Some
shit today.
analysts predict 2 rate cuts
We're still
by
inside the
end of
50 minutes
year are
range.
Still on the table. Is this a fair and accurate assumption? And what incoming data will the committee need to see to consider these cuts?
So what will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is that a significant majority of the committee, but also there's a pretty significant minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year.
And I would
What that
have
means
been
is
super
that
happy
each
to
of
take
those
long
persons who
afterwards,
wrote down
Nick.
an
If this
cut in
week here
rates
was coming lower,
this year, they think that
I
there's
would have
some,
been happy to take
state
the
of
long,
world
even
where
if Powell was
inflation doesn't
speaking,
prove
to be
as
honest.
high, or the labor market weakens, or some
If these
combination
things
of
was
those
coming
two
lower
things, it
here,
will turn out to be more
I would have
likely than
taken
not
it.
appropriate to
100%.
reduce policy rates, subject to great uncertainty. I mean, we will, the story has been evolving, and our thinking has been adapting, and that will continue.
People hit the likes. Yes, leave the likes, guys.
Thank you.
Appreciate you.
Chair Powell.
Just waiting to
although
see these
a
things moving.
ceasefire has been
Yes, did, yes.
tentatively reached in the Middle East, the situation still has the potential to
Yes, did it
open
before the NQ.
global and energy
But
markets,
then,
especially if the ceasefire is broken.
Not in Q as
while at this
well.
point, Iran is seen
Any
as
Portuguese here?
unlikely to close.
I have to
the
think
Strait of
about it, Afonso. I'm
Hormuz.
not sure.
That decision could change. How is the Fed assessing
Long now,
the
Osek.
current
You switch to
situation
long?
and incorporating those assessments as it
Doesn't anybody has
considers
problem with NT or
future
Tradovate?
adjustment
Not
to
me.
economic,
Mufti had problem with
projections
Tradovate, but
and
I'm
its
not
stand
sure.
on
But I didn't have any problem with
monetary
Tradovate.
policy.
But Mufti had them.
I
Just
think it's too
if you're
early
having problem with the
to
platform,
know
guys, don't
what
push
any
trades.
Economic implications might
Don't look-
be, and
don't
I
look
would
to
not
push
want
trades.
Speculate. Like everyone else, we are, of course, watching the situation.
Thank you. And Chair Powell, after reviewing the economic data following the meeting last week, it seems to me that the committee is indicating that we could be headed for a situation where inflation accelerates while unemployment rises and growth become more sluggish. In this scenario, this will put the Fed's dual mandate of maximum employment and price stability in tension with one another. In this scenario, how does the Fed balance these priorities in order to achieve both mandates?
So let me say that we're not facing that right now, and that isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal. Two variables, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and I would say again, we're not in that situation right now.
Thank you, Mr. Chairman. Yield back.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. Heising of Michigan's recognized.
All in, guys.
Thank you, Chair Hill and Chair Powell. Good to see you again. I got a lot to cover, so we're going to try and keep this concise. But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025.
What is going to happen is that price action is going to move after this freaking speech, and we're
fiscal
not
policy
going to
and
take any trade, but it's fine.
I would add energy into that, by the way. We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. This is no different than any set of policy changes at the beginning of the administration. However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to
why my Chrome is so slow today?
Of how fiscal policies might impact the economy into their forecasts. This seems inconsistent, and
yeah, I like the
sidebarred with
that idea of long
say, okay, did I hear this correctly?
Yes,
his question and
after liquidating the lows.
What I heard is that there was a belief that the IRA would
see,
not be
it looked good,
but that tariffs could be. Therefore,
it's that 3-minute chart.
You and others were commenting on tariffs, and
yeah, that was a good long.
I know you try to be consensus driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their implications?
It can be both. Trapping the shorts and liquidity, so like double confirmation.
Participants having different assumptions that would render the SEP summary of economic projections biased, meaningless, useless, less impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, should each participant disclose what assumptions that they're using and building into that? So here's the question.
So that's a great question. That really, when the summary of economic projections was originally designed and put into effect in this way, the way it works is that individuals are free to make whatever assumptions they want, and they do disclose them.
Let me close this.
They disclose them in their.
Let me close it for a moment. I'm getting the headache of listening to him. This thing is not moving at all. Chop, 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 chop. Yeah, I might go. I'm here for 25 minutes more. Something that is interesting comes and happens, but for the moment, it's surviving, right? We are not forced to take trades. We're not forced to take trades. If you believe you're forced to take trades, then something is wrong there. Remember that if you're forced to take trades, something is wrong. And if it's something wrong, that's not good. Let me load the data in TradeZella. Let's do it together. Okay. In the moment we wait. Add trades, file upload, add trades, load file. I have to add the trades of yesterday, so it's loading. am 23. Yeah, that's good. Why? How I'm still negative? Wait, I'm still negative this month? No. And this is from the beginning. This month I'm up. Yeah, I'm up $337 this month. If it was not for this slippage, we're doing much better. We have, for the moment, we had free. Oh, by the way, this was my goal this month. Well, my goal this month was reduce the losing trades, and for the moment, by reducing the number of trades I've taken, I reduce as well the taking bullshit trades. So for the moment, I have 3 losing days. That's quite beautiful to see. And we have a few more days off. I mean, today is going to be probably no trades if nothing happens that is interesting. So this is a great improvement for previous month. If we go to the previous month, we had 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yes. And moving from 8 trading days to 5, it was my goal to reduce them, and it's working. That, of course, it's one definition, and we improve. So at least we close a little bit green right now there. This was a big hit on my P&L of this freaking slippage day, but it is what it is. Again, a Tuesday. Tuesday are the days then. Tuesday are the days. Step by step, we're improving. Shitty price action. Really shitty price action. I need some coffee after this. How the heck can we trade this market? Huh? How the heck can we trade this market? Let's put it back.
No, evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our Black neighbors, the access to equity, the access to housing is diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates and so forth, that drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
I'm not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said, again, it hit a 5-year low. And again, I'm getting this from a source. But this sets the market up for higher inflation and more burdensome housing costs to years to come. So Chairman Powell, you know, I'm looking at this monetary whatever policy framework that you guys have put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about.
I was thinking the same, because I was like, how can you go to Powell, ask a question, say about a statistic, and you don't have what is the source, who get with that statistic, and say, oh, I read it from some articles. I'm prepared.
But don't you think that the restrictive monetary policy framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think it restores price stability. The point of higher rates is to...
So you don't think the higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It does not, you know, over the long...
I need to go back to talk to
over the long
women
run,
that the study...
Fed will not be, our policy will not be...
Let him speak.
Longer run housing supply in the United
States. Okay,
What the heck?
What is the difference? And I'm honestly confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation?
Yeah, John, she's
guys
fishing
use
for
this
you for
terminology.
somehow.
What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
You know, those are not terms that we use particularly often.
What's
but
supply-driven formula?
that would mean that, you know, that there's not enough supply to meet demand, but at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious,
demand
'cause I
or
see somebody
supply
behind you
in
kind of
housing.
checking. I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together, that I do feel like is going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home
Even though the
builders and
housing
everybody
supply
else.
has been
That's in
impacted
the
by the
long
high
run, that is
interest
the single
Oh,
thing
let
that
him speak.
Congress has assigned us to do.
But you see where I'm coming from. It is impacting future supply of housing, right?
Not in the long run, no.
Okay. Well,
Gentlewoman's
Mr.
time
Chair,
has
thank you.
expired. The gentleman from Wisconsin, Mr. Stile, who's also the chair of our
So unprofessional. Let him speak and be like, you know where I'm coming from? Yo, he's not gonna judge where you're coming from. This guy is done a statistic game.
I want to dive into two actions the Fed's recently taken to get a little additional color on. Yesterday, the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus on the core and measurable risks. Could you provide color as to whether or not any new information came to light that led to the decision of the Fed to remove that yesterday?
I'm not aware of any new information. No, we just think it's the right thing to do, and of course made an announcement on Monday under Governor Bowman's, Vice Chair Bowman's leadership.
Why would it not have been done previously if it's the right thing to do? I agree with you, it's the right thing to do. Why was it?
Did you see
any
Trump's
timeline as to
speech?
why
No.
that was done yesterday versus previously?
I mean,
No,
Trump is
I think this is a problem that we came to
it's just
understand
insanity.
as a problem over the course of the last couple of years.
He said yesterday
And,
that peace was
you know,
there.
began
He was
considering what's
like,
going
he
on here.
posted
We're
in
hearing a
Twitter,
lot
he
of
was like,
reports of
peace,
debanking
peace.
and that sort
Thanks,
of thing.
peace in the world. And
over
after a
the
few
course of
hours,
really
Iran and Israel were still
2024,
attacking each other.
came to the view that this was a serious problem that we need to address, and we've said that publicly, and now we're doing this, and so are the other agencies, by the way.
I appreciate you taking that action. I do agree that there were real political bias in some of those exams, in particular as it related to regulated entities engaged in the digital asset space. Let me shift into the digital asset space if I can. Another action recently taken by the Fed, the novel activities
coming back again
supervision
lower.
program was
Nothing's
ended,
happening
in which
here,
were
guys.
several statements on digital asset related risks that deterred bank involvement in particular. You in the Fed and others in the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
You know, I wouldn't be the one to be picking that up first, but what I do see is a very significant change in the tone, and it really does reflect evolving thinking and the evolving status of the crypto industry, and I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets or crypto space?
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies, and banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Thank you very much. Let me shift gears because I want to give you just a little bit of an opportunity to comment on the housing sector once again, but give you a little freedom here to speak to that area. You correctly are trying to balance inflation and price stability, but also higher rates have a significant impact on the housing market, as shelter and housing costs are a significant driver of why many families can't afford the things that they need. Can you provide color as to how you're analyzing
I mean,
the impact that housing
I just read now the Italian news about he was not
with
happy.
your desire to maintain price stability, the interest
It's like
rates,
they
that is
don't
currently
know what
set
the
by
fuck
Fed.
they're doing, something like that. He
So,
said.
you know, we realize that people are feeling high housing costs and high financing costs. In terms of inflation, we look at something called owner's equivalent rent and rentals, and that's meant to capture both rented housing and owned housing. And it's been very sticky.
It was so
You know, it's
interesting
been
yesterday because
one of the stickiest parts of inflation. I'm happy to
It was so interesting yesterday because I read the news of the tweet of Elon Musk, and then after 1 hour I saw the news of the ministers were still getting fired, and I was like, what the fuck?
say
We're breaking
now
high.
actually is coming down, restore price stability, and let the market work.
Breaking
Even
high.
then, though, we're still going to have a housing shortage.
What data do you think is leading to the reduction in the rent equivalent?
I just think it took time. So the thought is when you would think that if rents come up every year, you would think it would take 1 year or 2 years for a lack of growth in rents to show up in a lack of growth in housing prices. It turns out it takes 4 years or 3 years. If you're an existing tenant, it's a complicated thought, but if you're an existing tenant, you don't actually catch up the way you would if new tenants came in. And so that's made the measurement of inflation stickier. But I'm happy to say we've been through that period now, and we are really seeing now housing services inflation pretty close to where it was when inflation was solidly at 2%.
Thank
I
you.
think I will call it a day.
Gentleman
Then,
yields
yeah,
back.
Alfonso, you do good to
Gentleman from
call yourself a
California,
day
Mr.
out of
Ricardo,
this.
is recognized for 5 minutes.
Thank you, Mr. Chair.
Now we're
Thank
out
you
of the
for
50 minutes
your
range
testimony
again.
today. I appreciate that your dual mandate is full employment and price stability, and I appreciate your efforts on behalf of our country to achieve those. My understanding is that critical data is collected by the Bureau of Labor Statistics to help formulate
How much we have from the highs
indicators
of
that
the
you
market?
rely on, that we rely on to understand unemployment rates,
44 points.
CPI, and other inflation indicators. We are certainly hearing a lot about the impacts of DOGE on our workforce, and specifically about the elimination of many of those positions in BLS. And now we have a proposal in front of Congress to cut $56 million from that agency. Are you concerned about the ability of your team to get accurate data and about the ability to
I interrupt. Man, today is hard to take any trades. I enter upside. Good
wouldn't
luck,
say that I'm
Siddharth.
concerned about the data today.
I'm getting bored.
clearly
I'm
there
getting
has
so
been
bored.
a very mild degradation of the scope of the surveys and things like that. But I would say the direction of travel is something I'm concerned about, and that is measuring the
Just think about something, guys, when you look at this,
project that's
is that many people were trading in this shit price action. Think about how many people are trading in that shitty price action, and think about yourself. If you are not someone that is blowing accounts inside the price action, you are good. You've done amazing. You've lost a little bit, it's good. 2 years ago, I would have blown up accounts there inside. Literally blow up accounts. Here, inside this price action. Taking a long, getting stopped out. Taking a short, getting stopped out. Okay, it's gonna go long, it's getting stopped out. It's gonna start short again because of course we didn't take the previous high, so we have to, bullshit. So if you're not getting stopped out, guys, and you're doing amazing. Yeah. If you survive today, you're doing amazing. Oh my god. There is nothing to do, guys. It's just better just to call yourself out from this shit.
At your understanding, do you anticipate there may be impacts down the road?
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the retailers, that what's being sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more, but I want to be honest, we really don't know how much of that's going to be passed through to the consumers. We just don't know, and we won't know until we see it. It could be lower than we expect. It could be higher.
We are 24 looking this live.
Which is kind of what we're doing.
Shut the heck, shut the hell up, guys.
Uncertainty. Another thing he told me.
I wish, you know, if I was getting payouts like last year, I would have done more payout, more duck race. But I need some payouts. I need some payouts. 10 hours, let it run. 24, yeah, let's do it like a 10 hours, 24 hours duck race. Oh my god. The most boring price action ever. How long did it take to break this 50 minutes range? 1 hour and 10 minutes, guys. It took 1 hour and 10 minutes to break these things, this 50 minutes range, properly, because this one is just a fake out. Absolutely insane. And I don't see a proper trade right now. The only things I see trading this is that we can retest the 50 minutes range. Can definitely retest the 50 minutes range, but and I do like the idea of retesting the 50 minutes range here, but it has to do with a proper like candle and price action that it looks interesting for me, and it's not.
On future generations by this particular bill, could there be a combination of very high debt and very little room to move monetary policy that could undermine our ability to respond to the next recession?
So we faced that issue quite a bit in the era of very low interest rates, but you know we're at higher levels of interest rates now, so there was significantly more room to cut than there was then.
Thank you.
Gentleman yields back. Gentleman from Wisconsin, Mr. Fitzgerald, you're recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something we had some brief discussions about this in the past, but in September of 2024, with core inflation still being above target,
full port long.
The labor market was holding
What is
steady
the
at the
take
time.
profit?
The Fed made a decision to cut rates
448.
by a full 0.5 percentage
Good
point.
luck. Are you trying
It kinda
to
raised
pass some
some serious
evaluations?
questions as to whether or not the data like truly supported such a move at that time, and I think some of us were surprised that it was a full 0.5%. So, can you revisit that again? What the Fed was thinking
done
at
with
that
the shit.
time? Because it seems to be somewhat of an enigma now. It stands out as, you know, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So, first of all, actually the inflation and employment readings were very similar then to what they are now. They weren't terribly
True,
different, a tenth or two.
Right.
But the difference then was you mentioned that the labor market was stable. It wasn't. The unemployment rate had actually gone up almost a full percentage point. I was very clear about this. We were very clear about it in real time too. The concern at that time was that there really hasn't been an experience or hadn't been an experience in the modern era in which the unemployment rate has gone up close to 1% that hasn't been followed by much higher levels of unemployment in a recession. So we were looking at that and saying, and remember, at that point, at the point we're talking about, the federal funds rate was 5.3%, so definitely very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So that it was all about the labor market. Inflation.
Yeah, until
was the
he's
same
speaking,
and,
it looks like
was roughly the
nothing.
same, but it was the rate of change with the
And
unemployment rate
let's
that
remember
raised
that
concerns.
Iran and Israel
Remember, we
are
were being
back fighting.
criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September, and it seemed like the right thing to do. You know, and at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? You know, so
And I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know you've, this morning already, you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean,
yeah,
are we
nothing,
in a
guys.
position
I'm getting bored.
where it would
Really
be
bored.
appropriate to do something
Really freaking bored.
as big as a 0.5% cut again?
Well, look, as I said earlier, if you just look at the
Honestly, this
basic
can be
data
a
and
really
don't
interesting, not
look
long,
at the forecast,
but the
you would
deposit.
say that we would have continued cutting. The difference,
Short.
of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now,
Aggressive, eh? I would
we
never
can't
take
just
something like
ignore
this,
that.
but
But we're just saying let's wait and see more. That's all we're doing. And if you will have noticed,
this has been a
substantial
really
majority
slow
of the community
grind.
has written down rate cuts in the remaining
It
4
needs to
years
stop
for,
a few more
4
people
meetings
here.
this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things. We're going to continue to adapt as the data adapt. But that is the difference between then and now. Then, inflation was forecasted to continue to come down. Here, it's forecasted to go up by all forecasters. So, and again, we're not overreacting to that. We're just saying, hey, as long as the economy's strong, we can take a little bit of a pause here. And that's what we're doing. And again, continue to adapt as the data comes in. If we see data that suggests that inflation,
Yeah, no trades today, everything neither. I'm done with this shit.
that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID.
Yeah, guys, I'm gonna call it a
I know
fuck this
myself
shit.
and other.
I'm done. It was really, really energy consumption to look at this price action. Guys, this is the last day for the 80% off with Apex. So just you remember, you can use my code. Appreciate each one of you guys. And yeah, good luck with today. Lazy market. Yes, Fayad. Wish you the best. See you tomorrow with no power speaking. We're gonna have a better probably price action. There is no need to take trades today. Days like this happens. We have to just accept them, and let's don't get, taking a minus $200 loss today in a stupid trade. Tomorrow, if I make a profit, it's just to recover the loss of today, not even to go higher my account. So take it easy. 90% sounds a good idea. I don't know when it's gonna happen, but good luck with that. And I appreciate you, Siddharth. See you, Jose. See you, Alfonso. Guys, be disciplined. Today there's nothing to do. We accept it. Peace and love, guys. Have a good one.